What's going on YouTube? How we doing today? We're going to be talking about the Iron Condor today. We talked about the Iron Butterfly in our last episode, but I just want to clear what the difference is between the Iron Condor and the Iron Butterfly. The Iron Condor expands our max profit potential, so like our profit margin for that max profit will be expanded instead of just at one strike price. Now, if we take a look, we can see how an Iron Condor looks completely different from an Iron Butterfly. We can see how our short put and our short call are expanded across, and it gives us a wider range for max profit. And so anything from our short put to our short call would be our max profit. Anything from our short put to our long put or short call or short long call, we either break even, make us money, or lose us money. And as you know, if we go too above, which would be past our long call, or below our long put, we lose and get max loss, and this is not what we want. And I believe about delta and theta, people don't actually take that into consideration when they're trading options, and so I feel like they're losing and making their max loss bigger when they should just expand the time and make delta and theta eat at the time and make more money for a less loss. So we are going to be looking for less volatile stocks. Now, this is not financial advice at all, and I don't want you guys copying anything I'm doing because I'm not a financial advisor and I can't tell you guys things that will be completely 100%. So please do not copy any of these. Thank you. But we're going to be looking at AT&T today. Let's just say we believe that AT&T over the year is going to stay at the price range it is at, so $28 or so. We would come over to, trade options. Now, I just want to show you guys something. So let's say if we're going to go do a regular Iron Condor, we would sell a call, around the price we would think it would stay at, then we would sell a put, around the price we would stay at, and then buy a put as our long put underneath where we bought it, and same thing, we would buy a call above where we sold a call, and see we would be receiving a credit of $18. You see how we receive a credit of $18, but our max loss is $32. That is not what we want. That's not good for us. We can move around the long puts, short calls, anything we want, and we will not achieve what we really want. So if you come look, you can see how the delta is 0.46 right at the money, and we go right above it, it's 0.18, and you go above that, it's just 0.08. It's just not getting any better. Okay, you should be going by 0.3 delta. This is what I go by. This is what other option traders go by, is 0.3 delta. That is safe. That is what people go by. Don't ask me why, but this is what we go by. So the reason this is happening is because you're not letting it eat away at the time. Now you have to take your expiration date up here and push it out to a later date. Now we'll show you for example. So we're gonna restart, So if we choose our expiration to be the 23rd instead of the 16th, and do that same exact trade, you will see what happens. So we will sell a call right at the money. We will buy a call right above where we sold our last one. We will sell a put underneath the underlying share price, and we will buy a put as our long put right up beneath that. We will be receiving a credit of 31 cents, or as I should say, $31, or they glitching it to $32 for whatever reason. And you see how now our max loss is $18. Now, since delta and theta and all those Greek mythology stuff is just eating away at time, you can see how it changes for our max profit to be more than our max loss, and now we would be at a better comfort chance of making money. Now, this is what I really wanted to get through, to show people how to really use an Iron Condor and not F themselves when they're trying to use them. So this is something I really want to show you. An Iron Condor is really just basically as much like the Iron Butterfly, but it's expanding that profit margin. Just make sure you choose less volatile stocks, and you pretty much push your dates out so delta and theta and all that can eat at time. and make you money. Patience is key, and always buy time, because time is always gonna give you money, I would say. And yeah, that's it. So thank you for watching. That is the Iron Condor, and subscribe.
I'm an icon, man. And my girl about a 10. I should fuck her in the Benz.